Hey traders from around the world, this is Jeremy Alexander Newsom, and today is the last trading day of January 2016. January 29th, got about 5 minutes before the market closes. Just got back from the gym, trying to look buff. Still hasn't worked yet, and want to talk about the market and just kind of give you guys an idea about what is going on and what I'm keeping an eye on SPY and just the general markets. Really good gap today, phenomenal bounce. I'm loving it. Had some great day trading opportunities today, and overall, as we mentioned, Wednesday had a nice little pennant right there. And it's either going to break bearish or it's going to break bullish. Simple as that. And today we get a decided answer. We're breaking a little bit bullish on the SPY. And it's good for anyone who got a chance to add down in these levels, right? So check out the volume down here. Really, really good bullish volume. The bullish volume was stronger than any volume that has happened in the last few months, except for back here in August, which we also bounced with really good volume at the same support zone. So for longer term trades, again, I'm still neutral in the markets. Long term on the SPY, the DIA, and the Qs, those broad market ETFs, still quite neutral. The candle that I keep mentioning is this candle, the January 13th candle. If we break that high next week, which we very well may, my short-term perspective, my medium-term perspective, and my long-term perspective will all be insanely neutral. So what does that mean, Newsom, as traders? Well, it means that swing trading is going to be tough. Swing trading in the sense of, days to weeks to months, that's going to be a little bit difficult. Long-term trading, buy and hold your longer-term 20, 30, 40-year accounts, those are still okay. Buy low, sell high type of areas in the sense of, here's your weekly chart. And the SPY, a lot of traders added some of their positions down there, along with myself. Threw some money into the good old longer term account and down at that support level. So here's what's going to be interesting. A lot of people want the market to roll over here. The SPY, the DIA, and it just hasn't happened quite yet. I don't know entirely if it will. This black candle gapping down up here was a bearish retest gap. So what would be interesting to me if a lot of people hop on bearish right there, which, a lot of analysts are. Stock trades up, they get stopped out of their bearish positions, hop on bullish, the stock rolls over, they hop out of their bullish positions, hop into bearish, and then it goes up, and then something like that happens, and they just bail, and then this goes down. Could that happen sometime in May, potentially? Yes, there's a very good chance that is a probability, or a high possibility, honestly, that could happen in the SPY. Just totally flipping positions. So whenever you think something's happening, just the exact thing, opposite thing is happening. So in that neutrality, short term, medium term, long term, you're going to see me do less and less trading. January, even though it was one of our most profitable months ever, we had some of our lowest trades on record. We did not do that many trades because there was a lot of weird movement going on out there. It really wasn't just syncing up very well. So we only did 40 day trades in the entire month of January, which might sound like a lot, but on average, it's about 2 a day. And, you normally win one and you lose one, 50-50 record. And January is a very profitable month in our morning trading room. As of right now, locked in, let me hop over to the worksheet, 18 Rs on our day trades. So 18 Rs over the month of January, which was fantastic. Big shout outs to a lot of the traders who took some incredible gaps today. Let me give a shout out to Leslie and Niels and a few others, Maria, Dean, Zane. A lot of people playing GILD. What a fantastic gap today was on GILD. Let's look at this on the weekly chart. Here's your weekly, and earnings actually hasn't happened yet, but GILD, yes, absolutely breaking that support. Very, very bearish. 1, 2, 3, 4, 5 black candles in a row. So is this the time to go bearish? No, it is not. Not the time to go bearish. A lot of volume. I would say at this point, one would look for a retest and then a continuation a little bit lower on GILD. So again, a lot of profitable traders today on Gilead. I'm sure I'm forgetting a few, but most of them locking around 1.5 R. EA Games, Electronic Arts was another one that a few traders just absolutely demolished. Niels squeaked out a little bit of a profit. I think Dean as well. Leslie did as well. So again, just EA was a fun trade, fun gap, fun one to watch. Here's the intraday charts on it, and the aggressive trade was later in the day. I'll show you that to you in just a second. Earlier in the day, it was one like this. So low of the day break, retest, and a rollover. That was one that Leslie and a few others got in, and stop was up there somewhere. And then the really, really aggressive trade earlier in the day was this by this right there. And Harry Potter came in and saved us by a few pennies right there with that candle, and it ended up rolling over for some profits. So Electronic art, the day trading world, still a good thing. Kenneth Freeman did very well on Flex, ticker symbol FLEX. That's my nickname in the gym. And he bought in, I think, around 10:30. Stop was down here at the low of the day, and Flex was a bullish trade, and that continued up nicely. Speaking of bullish trades, Facebook, ladies and gentlemen, big shout out to Gene. He did very well on Facebook. A few other traders emailed me yesterday. This was one of the first trades they ever took. Was Facebook yesterday on the retest, and that worked out really, really well. Steven was asking about Facebook and kind of asking what to do on it at this particular point in time. Let's chat about Facebook. I'll talk about Amazon, and I'll get you guys wrapped up for the weekend. So Facebook, ladies and gentlemen, this is absolutely without question a very bullish gap on Facebook. You had all of these black candles. You're above the 113 candle. You're above that resistance right there. You broke above that gap. And I didn't personally trade Facebook yesterday. In fact, the entire month of January, every day trade I made was bearish, interestingly enough. So I'm really trying to focus in on our specialty in the room, which is bearish trades. And it paid off. I mean, a very profitable month for sure. But Facebook, regardless, a really great bullish gap. Now, here's something to keep in mind. Facebook is now at an all-time high. It's never been this high before. And I mentioned, I think Facebook, of the stocks out there, could be a $150 stock in 2016. I still kind of think that. A lot of revenue coming into that stock and a lot of profits. 2015 was horrible for all-time high breakouts. It's probably going to be the same for 2016. So Facebook breaking out, there's going to be a lot of people hopping on the bandwagon yesterday on Facebook. I will say it closed by the all-time high, so I am bullish on Facebook. Checks all across the board. My bias is bullish on Facebook. But at this particular point in time, this gap is a very strong support. If you're looking to play Facebook bullish, give this one a few days to a few weeks. Let the moving averages catch up and let something like this occur. And whenever that bounce comes in, those candles, that's the time to play Facebook bullish, in my personal opinion. Stan and a few others still have some shares of Facebook. Earnings did very, very well. So again, I'm bullish. It's confirmed bullish. Closed with the all-time high. All-time high breakouts have failed so many times in 2015, I literally lost count. So just keep that in mind. You're the highest you've ever been on Facebook. Phenomenal gaps, phenomenal volume, great location, solid candles. Let it pull back, retest, and prove that it wants to go higher. Facebook, that is. Here is Apple and then Amazon. Apple today had an interesting little setup on Apple. Didn't make this official because the risk reward was terrible. Didn't take the trade. I don't know who did or if someone did. But Steven Steckler got a chance to trade this one bullish today. Larry Howe got a chance to trade this one bullish today. I don't know if anyone else got a chance to or not in the day trading room. But here's the hourly chart on Apple, and you'll see how clean this was. Nice lot of cute black candles. There's your pennant right on the 10 EMA, and it should have rolled over if it was going to, and it did not. Gapped up, trapped those people, bullish gap. So Larry, Steven, great job on Apple. A lot of white candles coming in here, and we'll see what's going on. As of earnings, though, very bearish candles. So I do think that Apple, at some point, is going to come back and test at one level or another, the 200 simple moving average on the weekly. I mean, this is close enough for me, right? That can be called testing. The low is 92.39, and this is 91.76. It's close. It's really, really close. Volume is coming in. So I'm going to be pretty neutral on Apple as it's going to hang out between these long-term moving averages for a little bit. And at this particular juncture, if it breaks down, comes into this trend line, and then rolls over, I personally think Apple has some lower lows ahead in 2016. I'm not massively bullish on it. Being really, really cautious on any stock I trade or any trade I take on Apple. But we did get a very similar pattern back in here in 2013, right near the 200 simple moving average and bounce. We could bounce, no question about it. It isn't a buy low, sell high standpoint. I'm just going to be cautious. Any bullish trades I'm taking as a swing trade are going to be just small tiptoes, dip my toe in the water to see the temperature, and then kind of go from there. Otherwise, again, February, March, depending on what the market does, I might be really thin going into those months just to see what happens. Because again, January, really great month. After really great months, usually follow some rest and some consolidation. So just throwing that out there. Speaking of rest, Amazon, good Googa Mooga. This thing was very interesting the last 2 days. Incredible bearish gap today on Amazon, and a few traders hopping into some bear call spread. So I still have a wager on Amazon. This is the wager right there. Here's the gap, and as of yesterday, I was a little afraid that gap would fill, but I'm feeling a little bit better on it today. A lot of volume on both days, And we did technically make a higher low based on that candle right there. So some traders getting into some bear call spreads just based on the gap, because it is a bearish gap. No denying that at all. So Solange, Dan Walsh, Brian Bodie, myself, a few others up here in the 610, 615 area, expiring next Friday. So we got 1 week on those. I still think Amazon could reach to the 200. So something like this, trade up a little bit higher and possibly roll over. That's kind of what I'm expecting on Amazon. I don't know if it's going to happen or not, but going into the next few days, few weeks, I have a little bit of a bearish bias. Google's going to come up with earnings very soon. That's going to be interesting. Netflix, Tesla, both at some strong supports. It's all gravy, ladies and gentlemen. I'm excited about trading 2016 with you. Thank you, ladies and gentlemen, for making January one of the best months for real life trading in all aspects. Social media, growth, trading room attendance, webinar attendance, participation on our chat rooms, Twitters, LinkedIn's, Facebooks. Guys, I'm loving it. We're growing. We're just getting started. It's only been a year at real life trading. We're already shaking the foundations of the internet by educational basis and standards. If you get a chance, hop over to reallifetrain.com, click on the education tab. We did just get a chance to release a brand new ebook, 4 types of gaps. You do have to log in to get it, but it is entirely free. Holla at your boy. I'll see you guys next week. And until next time, remember, love life, live life, and trade. See ya.